You might think you have everything planned out to enjoy your golden years at home as a baby boomer. You have an IRA, you have a 401k, health insurance, life insurance. What else could you possibly need, right? Well, we all know life could change on a dime, from a disability caused by an illness or just the natural result of aging. If you suddenly found yourself needing long-term care, how long do you think your money would last? Not as long as you think, I bet. Well, we've invited Bill Jones, president of MedAmerica Insurance Company, to give us some pointers on when and how to protect our independence and our financial security, even when our health care needs are high. So, Bill, thank you for joining us.
Morgan, thanks for having me on the show.
I have a lot of questions. What are the chances of someone actually needing long-term health care?
Let me give you two statistics. One, 7 out of 10 baby boomer homes are going to go through this issue before they pass away. 7 out of 10. Those odds are worse than the flip of a coin, heads or tails.
Yeah.
70%. And unfortunately, when you reach age 85, there's a 50% chance that if you live to be 85 years old, which a lot of people do today, that you're going to end up with some form of dementia or Alzheimer's.
I think all of us are terrified of that. So there's certainly a risk out there, but how serious is the risk?
Well, the risk is pretty serious. You know, I'm like you, and probably like most of our viewers today, is that, you know, I don't like paying insurance premiums either, and why do I have to buy another form of insurance? I already pay a lot for insurance.
Well, that's the thing. I mean, we've already got all these different insurances. Do we really need one to cover long-term health care?
Let's talk about the costs of providing the care for a second. A nursing home, and I'm just going to round this off, a nursing home can run $100,000 a year. $100,000 a year, $9,000 a month out of pocket. Assisted living facilities can run $70,000 a year, and home care can run $50,000 to $60,000 a year. Now, most of our viewers today, I'll bet, do not have that money budgeted to pay for long-term care costs.
What can a baby boomer do to start preparing for the possibility of chronic care?
Well, you know, first, you know, watching a show like this and learning what the real risks are is one of the things that they can do. You know, the options are very limited on what you can do. There are only 3 options to manage the risk of needing long-term care. One is self-funding, putting money aside. 2 is Medicaid, you know, government assistance. Or 3 is insurance, you know, transferring the risk of this to an insurance company.
So how does your company help in there, since you would be the third one here?
Well,
the insurance, what do you guys do exactly?
Well, we're the third one, but before I answer that, let me just go back and just say, you know, it's option 1, 2, or 3. There's no 4th option, like none of the above, or 5th option, like I don't want to choose, because this is not a pleasant subject to talk about.
No.
You know, I don't want to choose, so I'll deal with this later. You know, that's not an option. Everyone has selected, knowingly or not, an option. Self-funding, Medicaid, or insurance.
So if I were going to buy any other kind of insurance, there would be a lot of different ones to choose from. Is long-term care insurance that way too? Lots of different ones?
Yes, Morgan, it is. There are different basic designs of policies for long-term care. The classic design is a reimbursement model that works like most health insurance. Mm-hmm. You know, certain things are covered, you get reimbursed after you have those expenses, and we have that design, and we call our policy FlexCare. The second model is a disability model. It pays cash. It just gives you a monthly check. Once you're benefit eligible, you get a check in the mail, and you can put a plan together. You can put a plan of care together with your family and with the help of the company, and you can spend that money on whatever you need to spend it on, you know, to provide the services that you need. We have that design. It's called Simplicity. The third type is a shorter version, more of an economy plan. It's called Transitions. It helps people transition from that event that happened, whether it's a stroke or some terrible event that happens that causes the need for long-term care. You get into that setting, and then you get out of that setting, either into more of a chronic long-term care setting or back to health and back at home. So we have Transitions, which helps people transition through those short-term needs.
So, Bill, I mean, one question I have is, when should someone start thinking about buying this? Is there an age that's really a little too young, and then maybe at some point you kind of miss the boat?
Well, actually, people can buy this type of coverage from the age of 18 up to age 85, and we actually have people that are insured in their 20s that have recognized this.
That's so young,
It's
really?
It's young. It happens. You know, accidents happen.
Well, that's
Bad
true.
things happen. Bad health can happen at any time. You don't have to be a baby boomer for that to happen, and we've all seen that. We can accept death, we accept our mortality, but accepting the possibility of not being independent, not getting through the day on your own is frankly repulsive to most of us. You know, we just don't want to think about it. So it's natural to put it off. And the consequence of that is that industry-wide, about a third, almost a third of the people that apply for long-term care insurance do not get accepted.
Really?
Because they waited too long. They waited until something bad was diagnosed or something bad happened, and they're not able to get the coverage.
Bill, I mean, let's suppose that someone in the audience, or moi, is interested in exploring this. What would be the first steps they would take?
Well, I say there are three things you should do. You know, the first thing you should do is become aware. Really become aware. Do your homework. Don't just listen to me or you or whomever, you know.
They should listen to me.
Well,
Come on.
they can listen to you. They won't listen to me. But, you know, seriously, become aware of what the risks are. Do your research. You know, we all get online. Get online and do your research. There's a great nonprofit organization called 3in4needmore.com. And that really talks about, you know, close to what the statistics are. You know, 3 in 4 of us are going to need help. So go to that website, learn about what the risks are, what the costs are, number one. Number two, accept this is real. Take this on personally. You know, we baby boomers don't shy away from responsibility. You know, we've been very, very good about taking on responsibility as we've aged. Well, the job's not over. You know, we have more to do to protect our children and our families. So accept this is real. The government's not going to solve the problem. No one else is going to take this on, take this away from you. You have to do it yourself. So accept that it's real. And then third, do something about it. Action. Take some kind of action to do this. Knowledge without action is worthless.
Thank you so much for helping us go through this. Having been there, it's important for people to deal with. And for more information on how you can prepare for your health needs while staying financially independent, email them at info@medamericaltc.com. Now, coming up on Baby Boomers in America, even if your savings and investments tank during the recession, you might still be sitting on a very nice nest egg for retirement. And we will explain that next.